All right, let's talk about my Bitcoin Elliott Wave analysis. And from the all-time high, we have a clear 5-wave structure, finishing out the 5th wave into the wave A of the overall macro downtrend, looking for the B wave high after the A wave completion. But first, we are still working on the 5th leg of this overall downtrend here, and we can see that we clearly have put in almost 5 waves. We have a 1, 2, 3 working on the 4 into the 5th of the 5th of the A. And where that leads us today is the overall structure of a wave 4 comprehensive corrective structure, a 333 or a 335, right? So we could be looking at this as a 333. So we have an ABC, so that's 3 there, ABC, that's 3 there, and then an ABC, and that's 3 there, which would put us at a overall WXY of the overall wave 4 completion. So again, you have a 1, 2, 3, a 1, 2, 3, a 1, 2, 3, which is ultimately just a larger WXY, right? So that's a 3, 3, 3. Now, we can assume that from a 3, 3, 3, that is the wave 4 high, and then now we're looking for the wave 5 to be put in, and we should start to see some sort of motive wave structure. So we could be seeing this as a first wave, a second wave retrace, a third wave down, a fourth wave, and a fifth wave, and that would complete the 5-5 of the A, right? But we could also be looking in contrast, because we always look at the opposites of, instead of a 3-3-3, we could be looking at something like a 3-3-5 in a ending diagonal here. So we have again, we have our 3s. This remains unchanged. 1, 2, 3, 1, 2, 3. And then this would be our 5-wave sequence. So this would be the 1, 2, 3, 4, 5 in a broadening wedge diagonal, which can always happen. So again, this would be a 3, 3, 5 instead of the 3, because you have a 5-wave motive sequence. So if we do see a bit of a price bounce here and a continuation higher, ultimately we'll look to short either the weekly or, again, just another sweep of the highs of the SFP of the highs here, right? So we have 1, 2, 3, 4, 5, ending the 3, 3, 3, or the 3, 3, 5, sorry. And then you have, again, you would be looking for a motive wave sequence down into this lower time frame support, right? Ultimately, you'd be looking for the golden pocket. This is taking from the bear cycle lows to the bull market highs, getting your 666 or your 66 and your 618 Fibonacci level. Either way, we're looking for 2 scenarios. Another bounce corrective move up before a final flush into the golden pocket, or you have a corrective 3-3-3 finish, and then now we are looking for what is happening here locally. And locally, we can maybe start to look at a few things, right? We can assume that we have this as a wave 1, 2, a 3, a 4, and a 5, and that would be your wave 1. And then now you're looking for the corrective structure, wave 2, into the 618. So then you'd have your second wave here. So that would be your 1, 2, and then you'd be looking for your extended wave 3 down, preferably below 60K. If not, this target would likely take us into the golden pocket Fibonacci zone here. So we have our target down here. So then this would be the 1, the 2, this would be the 3, look for the 4, and then a 5 final 5th drive into this pocket here. Now, of course, there's always a scenario that we have a truncation, which can occur when the 5th wave does not terminate below and we get something like a 1, 2, 3, 4, 5, and we fail to take out the lows, which is very rare. It's on the table. But the highest probability is that we do see some sort of final SFP takeout of the 60K lows into the lower confluence here. So let's go ahead and cake in the lower time frame confluence. Again, this is the assumption that this is the wave 4 correctional sideways, right? And we have our larger WXY in this zone, whether it's the 333 or the 335. We are still looking at a overall move lower to pick up a long. We are now short from the MPOC, right? So we have this short setup here that we showed at the MPOC, and we are slowly writing that down here. But I think overall, where does this take us? What can we look for next? So let's, again, look at our overall range. We have our values here, so we're right in the middle at a POC. we're not going to be trading anything within the POC. All of the better trades, for example, and I can show you all of the trades that I have taken in this zone have been outside of value, right? So we have, let's see here, we have, and then we have our 3 drives as well. So 3 drives happened over here. We shorted here at the value area high. That's a 1, 2, 3 third drive. And then we came down here into the 618, right? So we have the 618 pocket down into this and the 786, in which we've taken a long down there. And we've juiced that move up and then shorted the NPOC. So all of these trades happened outside of value, which is the overall case of why we are not trading anything inside of this zone here. We do not like to trade within the POC. The better trades, right? You could have taken the long here. You could have taken the long here, shorted here. It's again the value area high, the POC, the value area low. Now, what we have right here is we can start to look at where are the next short trades that I'd be looking at. Well, there's a couple things on the table. One, you have your 618 golden pocket right here from the highs to the lows. Let's see if we have a VWAP. I think the VWAP actually was tapped today. So basically, I would be looking at the VWAP from this perspective. And with an Elliott Wave perspective, you can be looking at this structure here, right? You have a 3, 4, and a 5, and then you're working on a B, C structure like that, right? So what overall, again, you want to see a 1, 2, and a 3. So if I'm looking for something here at the value area high, obviously you want to kind of be looking for shorts at the value area high and longs at the value area low, as you can see here. So obviously this context here, I would be looking at this level here as a short setup here. Something like this. Let's see if there's any context here. I believe there is a daily level. Let's see. We have a daily level here at the 618. Actually the 66. Yeah, the 618. So we can go ahead and mark that. So we have a daily level there at the 618, the value area high, and then we also have the golden pocket. I think we can cake in the monthly open. So if we look at the monthly open here, so we have the monthly open at March 1st over here, right? And then we have the value area high, the value area low, and the POC of this monthly. So not only do we have the golden pocket, we have a daily, we have the monthly value area high, and then we have the range value area high as a confluence zone. So simply, I would be looking at this structure here. You would be having a bit of a wide invalidation here. So this is not my favorite setup to be had, right? So you have, that's a little bit over 3.5 R. For a total of 17%. You're having a very wide risk of placing your stops here. For something like this, you would probably want to trade some sort of, if we see something like this and we come up into it, you would want to kind of trade the reaction. And let's say we get it just an SFP of the value area higher daily, you place your stops above that local assumed high and you try to attempt your trade setup. And that could be a very nice, overall short setup. If this is a 1, 2 down into the 3, and then nice, you're capturing on that third drive. The second area of short that I'd be looking for is the scenario where we do a sweep of the value or the high, right? So this would be capturing on the 3, 3, 5 scenario. So this is a 1, 2, 3, 4, and then into the 5th. So you'd be looking for some constructive movement up into the SFP of the NPOC that we shorted, take out the highs, look for an SFP, and then at least try to short that assumed, overall wave 4 extension or wave 4 completion of the Y wave. Now, I would say that if we did see something like that, I'd try to be a bit more patient because I think we could probably see something like that. And I'd be looking to short back up here. So you have a short here at the 61866 that you could attempt. So let's go ahead and we'll keep that here. You could also try to short also we have the 97K anchored VWAP we should put up here at the 97K, right? So again, if we get a move up in an SFP of the 73, 74K highs, this would be another zone I'd be looking at. Otherwise, I would be also looking at this pocket here. So again, what we can do is go ahead and look at the range value here, which is about a 2 or 3 day. We have the POC coming in at the monthly. So I'd be looking at this as more of a zone and seeing how we react and come up into this zone. Obviously, if we gain acceptance into this zone over here, so if we come up, gain acceptance, flip these levels up to support, you are at least likely to see a move up to the monthly. And then you could be looking at the monthly as another SFP area, rejection, trade that into the overall downtrend confluence here at 55K. So 3 areas of confluence of short levels that I'd be looking for. 1, an intraday setup here at the 6.6, 6.18. If that is flipped to support, I'd be looking for the short setup around the downtrend anchored VWAP, a high sweep, and then I'd also be looking if we continue to trend upwards and take out this level, but we're still making price continuation to the upside, right? We're taking these levels, then I'd be looking for this level as well. So I am in a short trade from the MPOC at 74K. I have taken profits all the way down here and here. I'm now just going to hold that, and I would like to see where price comes. So I'm not going to be super, eager to hop into another short trade here. I'd really like to be patient here. Obviously, that would be a great short trade to look at, and obviously, if we do reject there, then that's a pretty high likely chance that we reject here, and we're going to come down here and start to come and drive into the 55K confluence. For me personally, it's more about patience, positioning. I'm already positioned here, and I have my long setup down here. So I'm short from the highs, long from the lows. And right now I'm just waiting for the next move, whatever it is. And I'll gladly ride that winning position into lower or higher confluence and then look for the reversal trade on that setup. Personally, I think, I'd be more interested if price did come up and reclaim this. Okay, obviously we're going to have a good chance at least sweeping the high and having a rejection. Or again, we come up, flip this, and then this would be the big confluence zone to look at. Now, I'd be a little bit nervous to look at something up here because that would be a larger extended. But again, that's in the confluence of a 5-wave structure. There is a lot of liquidity that has been built up in this section from overall time and capitulation from this move down. So order flow is going to be your friend. Liquidity heat maps are going to be your friend. Narrative, context, volume, and being very patient, in my opinion, is always going to play off. I was very patient waiting for the 6.18, and we finally hit it down here and tapped the 7.86. SFP came up, reclaimed the 6.18, and then we've built constructive PA here. Now, at the moment, obviously we're still kind of building higher lows now and a bit of higher highs. So I wouldn't be surprised if we have this constructive move up back into this. So if you have a position up here with me, which I know some people do, I wouldn't be entirely too comfortable. I would still be, and I'd be always assessing the situation, the opposite scenario, which we are doing now. I personally have my long here, and I've kept my long here. Yes, I've taken profits here and here, just as I have with this short here and here. So ultimately, I'm hedged, I'm comfortable, and I'm going to play that up. But if you're only short from here and you don't have a long position here, obviously yesterday we were looking at the long here, which is the weekly open, but it didn't, I wanted to take these lows and I would have taken another long, but I didn't feel the need to aggressively enter in at the value area low, even though for me, I don't think that's an aggressive trade to enter in here. Personally, if you don't have long exposure, you're always going to be looking at the value area low for long exposure. Since I do have long exposure here, I didn't feel the need to risk excess long exposure unless it met my conditions of taking these lows because there's a good amount of liquidity right here. Now, obviously, I didn't take that, so I'm still just playing it safe with having my long open up here and my short here, because if we do get the move up like this, okay, well, then this long is still running. I didn't close it, and I didn't, panic sell or anything like that, and then I do have long exposure capturing on that move up, and I'm covered, and I'm juicing the trend, right? But let's say, I have TP2 here, and I have 50% of my position open still, and then this comes like this, then I have my long stopped out, and I have a running winning short position. Now, obviously, if I don't hit this short trade and we still have this move, I'm still covered. I'm not going to be upset that I didn't short this because I still have a short trade from here. So for people that are watching this and they don't have any short exposure, Yes, I think you should definitely be looking at the value area high always, especially in a macro trend. But that doesn't mean, okay, you exactly have to short this level right here, because we trade the reaction, we are patient, and we will look at order flow for confirmation, right? So obviously, this is a great place to look for. Does that mean short right away? No. Does that mean that we're going to get there? No. Obviously we could just roll over from here, and that would be a 1, 2, 3, right? So overall, patience right here. Don't trade anything in this unless you're really scalping on the lower time frames. But from a swing perspective, your best swing trades are always going to come outside of value. And right now, this is the value, right? Don't trade anything in here. Look at here. And and again, from like a long trade perspective, let's go over long because I covered shorts. There's nothing really to trade longs into now. You don't have any confluence below this. There's no net NPOCs. There's no dailies. You have already tapped at the 618 here. So from a long perspective, it's better to wait and just wait for the highest probable trade setup. Whether we come up into here or here or here, we can still come all the way down into this level, right? That's how we engineer liquidity and build up, liquidity into these pockets for market makers to play for the next move up. So again, if you're not in a long and you're seeing this and you're seeing the probabilities of this coming up, be patient, because it is more favorable to be patient and protect your capital for the next real move. Yes, we've captured on this move here, here, and here. But I'm okay if I miss this move here. And honestly, if we come up here and I don't like that and I don't take it, I'm okay if I miss that move here. We've already kind of made good profits within this zone. The real trade that I have been continuing to stress this entire time is that the highest probability is still lower. And why do I say that? Well, we've had this massive move down. This whole time. Let's get rid of all of this. And let's just look at the chart as is, right? The highest probability is still lower. You have your all-time high. You have weakness in the charts. You have bearish trending continuation. You had a massive continuation here. We had a nice bounce, yes, but all we've done is corrective move here. We haven't also bounced like this and done anything significant. For this whole, what is this? How many weeks has it been? Almost a month of sideways consolidation. We haven't really done anything. We haven't produced any sort of meaningful bullish price action. This is just a range. This is a sideways market. Of course, yes, we could definitely just, start pumping, and that would be frustrating, where if we just did something like this, right? And that's exactly why I'm keeping my long here and my spot positions that I bought here. Because if we see that, that covers me for the move up for some reason that, that's just the low. And it, but again, personally, the highest probability, in my opinion, is that we see lower prices into the lower liquidity here for a very, very major move up. So again, protect your capital in this zone. Don't be too eager to short every single little move you see on a lower time frame. Understand that the overall structure is bearish. The overall Elliott Wave count that we're seeing is bearish, and the overall macro count, right, gives us the 5-wave structure down, like we're seeing, into a 3-wave structure. So this is a 5, 3, and then this should be a 5. So over the course of the next year, this really is my plan. And this is why I'm just taking the time to walk you guys through why being patient here, even if it's for another 60 days, if we just keep doing this, I do think that these lows are not safe. You can see it on the liquidity charts. You can see how much liquidity has built up now. You can see from the Elliott Wave scenario, especially on these time frames, that it's likely that we can put in a 5th wave of a 5th wave and complete that A wave. It is higher probability that even just looking at this chart here, there's nothing happening in this zone. There's no, bearish or bullish, favorable things that we can look at. Of course, we are, kind of doing something like this. So I really, again, I wouldn't be surprised if we put in some sort of wedge like this and then we come down. But, let's look at the volume. What is volume saying? Volume's kind of trending lower still. Volume's dropping off. we don't have increasing and spiking volume as well. So again, overall, the big play that I will continue to stress about everything, this is, looking into the future, is the play in the moves down here for a large swing position. Wherever you capture on a swing position, I do think that there is going to be a favorable upside move to capture on, whether it's 100K, whether it's back simply to 88K. There is still a sizable swing trade to be had, whether it's swinging on spot or leverage. This is where I'm going to be looking to put a lot of my capital. Now, again, we can always come down here and then just keep trending down. But I think a lot of people always look at this and they say, oh, you know what, I'll long if it goes lower. And then when we start to come lower, we start to see red candles like this into the support, and you say, oh, I think it can go lower now. I would be kicking myself if I have been saying this whole time that I'm looking to long this for a sizable swing back up, and I don't actually take a long trade. So it's one, committing to the fact that you are going to be looking for a long trade down in that zone, especially under pressure, and two, saving your capital in here and not getting chopped up on all these trades and waiting for the actual move back up, right? And then you do your moves into that. So again, that's my plan. That's what I'm looking at here locally. That's what I'm looking at on the higher time frame. And again, I will continue to say, again, just protect your money, protect your capital, be patient, don't trade inside of value, wait for the liquidity to be swept on either side and take the favorable position that happens there. So again, I hope you guys enjoyed this video. Smash a like button if you have. And again, as always, feel free to DM me in the Discord and I'll be happy to answer any questions. Cheers and happy trading.